I am proud to highlight Karnataka's crucial role in driving innovation in the aerospace and defense sector. Karnataka contributes to 65% of India's aerospace-related exports and caters to 70% supplier base for India's aerospace and defense industry. Supported by robust infrastructure, skilled talent, and global partnerships, Karnataka is shaping the future of India's aerospace aspirations. Invest Karnataka 2025 will further solidify our state's position as a preferred investor destination for aerospace and defense companies.
Hi, you're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand today's trading action. Well, it's 9 a.m. and we're already seeing the pre-open rates tick in on the lower side, 23,354, albeit slightly better off than what we shut shop at. Now, what we're also looking at is that 4 consecutive days of losses is what we've already seen on the Nifty. In fact, this led to the longest losing streak for the markets in the last 2 months, particularly on the benchmark indices. Yesterday, even the broader markets came under wider pressure. Small caps and the mid caps both down by 1.5–2% each is what we have actually seen. And this all came in after the US, President Donald Trump indicated tariff news yet again, 25% imposing of tariffs on steel and aluminium products that pulled down the metals index sharply lower in trade, almost 3% of cuts that could be seen. However, post that, overnight what we've seen is that the US markets did end higher in the trade, and what we've also seen is that the Asia Pacific markets also opened mixed in the early morning trading action, but the GIFT Nifty trends were indicating to a muted start, and that's what we've actually seen in today's trading session. We will also be focusing on a whole host of stocks that will be in focus today because of the earnings factor, and of course a lot of other macro data will be coming in terms of IIP, inflation throughout this week, so that will also be important to track. We have with us a special guest joining in, Mr. Gaurav Dua, Head of Capital Market Strategy at Mirae Asset Share Khan, is now with us. Warm welcome to you, Mr. Dua, and thank you so much for taking the time out for this discussion. I wanted to kickstart this discussion by understanding what is your own sense on, the Trump tariff talk that is again beginning to hurt global markets and even Indian markets as well, especially those, sectors which are globally linked as well, especially the metal stocks. I mean, what we've also seen is that the rupee hit a record low yesterday. We did see that the gold prices went up to an all-time high and the metal stocks have been feeling the heat. How are you looking at this entire space?
So yes, I mean, a lot of news flow which is coming from across the world, and that is going to keep the markets extremely volatile. Recently, we have seen a 25% tariff which is being levied on imports of steel and aluminium into US. So India has around $2 billion worth of exports to US in terms of steel and around $280 million in terms of aluminium. Obviously, that will get impacted. But more worrisome is the fact that there are voices from the Trump administration which they are talking about the differential duty in India being among the highest compared to their other trading partners. This means that a lot more can come towards India in terms of the policy changes. Hopefully, there will be this negotiations, talks between the Indian Prime Minister and President Trump over the next few days, and markets can only hope that they are able to say find some solution there.
Okay, got that. Mr. Dua, I also wanted to get a sense of how are you looking at the overall market, since that has been also showing us a lot of volatility, weakness in the trend, and again a very narrow band of trade that is being seen at this point in time. Now, this is despite 2 or 3 of the major events domestically are already out of the way, the budgets, the RBI policy as well, and both have largely, remained conducive to the market sentiment. sentiments too. With the kind of announcements that have been made, they were on expected lines, and in fact, from the budget on the surprising on the higher side as well. Despite that, the market is lacking the confidence to continue on its upward journey. What do you think the market is really looking forward to again regain the momentum, sir?
So yes, market is showing extreme weakness. We have had 4 consecutive days of fall. This is despite the fact that you had a good budget, you had the interest rate cut by RBI. Delhi elections were also what market would have liked to see. Despite all the positive domestic flows, markets are weak, and this is more to do with global cues rather than what is happening domestically. And what we have seen yesterday, that there was a good selling in the derivative market by the FIs. So FIs will continue to sell because of the very narrow differential between the expected returns in the Indian market and the bond yields, risk-free, basically 4.5% that they're able to get in US. So I think that will continue to the same way on the market. So we continue to believe that bulk of the price damage in terms of Nifty, if we are able to hold on to 23,300, then bulk of the damage is basically largely done in Nifty, but the pain is likely to continue in terms of small cap and micro cap.
Let's also welcome Arpit Beriwal, analyst of derivatives at Wealth Management, Motilal Oswal Financial Services. Arpit, warm welcome. Good to have you with us. Well, slightly volatile start in the pre-open as what is being indicated for the markets today after 4 days of losses. How are you looking at the sentiment on the street? What are you trading between the benchmarks, Nifty or the Nifty Bank?
If you see, as rightly mentioned, Nifty has been in conditionally lower, high, lower trends in last 4 sessions. However, yesterday, if you seen Bank Nifty, in the second half of the session, some recovery was seen from the lower levels from 49,650. It tested its previous breakout zone, and some recovery was seen in the banking index in the previous session, mainly led by the Kotak Bank. So, if you see the chart setup wise, first talking about Bank Nifty, so Bank Nifty is trading in a broader range between 14,500 to 50,500. So if we see the setup wise, relatively Bank Nifty is outperforming as compared to Nifty. So if the recovery has to happen, I think Bank Nifty is likely to lead the recovery. So today, important would be 50,100 zones. If Bank Nifty is able to sustain above 50,100 zones, then we can see some pullback towards 50,350, 50,500 with a major support near around 40 and 750. If we talk about Nifty, so on the daily structure, it is forming low rise, low lows. So till it doesn't surpass above 23,550, 23,600 zones, Nifty is likely to be in a range between 23,333 to 22,600 zones, and stock specific action is likely to be seen within this band.
Fair point. Any key stocks that you'll be looking at today? We've settled just 1 point higher on the Nifty in the pre-open rate, 23,383. What looks okay in today's market to trade in terms of stocks, Arpit?
So if you see the overall setup wise, large cap has been relatively better. However, we
Yeah.
have seen broad-based selling in the mid cap and small cap space. So we'd like to go with the large cap pack itself. And within that also, if you look at the overall structure of Kotak Bank. So if you see the setup of Kotak Bank, relatively it has been quite outperformer. In spite of the market weakness in the last 15-20 sessions, it has been trading near about 15, 1930, 1940 levels. So first pick would be Kotak Bank. That is looking very strong on charts. So around 1945, 1950, that is a good entry level with major support around 1900 levels. Slowly, steadily, the stock can move towards 2000, 2050 levels. So within the private banking space, Kotak Bank is a preferred pick. Apart from that, if we see large cap IT also has been relatively resilient. So if we see the chart setup of Tech Mahindra, so Tech Mahindra also in spite of market weakness, it is holding well. So on the weekly scale, it is forming higher highs. On the daily scale, it is trading about short-term moving averages above 1680, 1690 levels. So I think slowly, steadily, it is on the verge of its falling supply trend and breakout. And I think Techem also we can see a good move towards 1730, 1750 levels, slow and steadily move. So this would be a two preferred picks within the large cap space. Talking about the mid cap and small cap, it's better to wait or watch. If we see some recovery, then would be a better opportunities to play within the mid cap and small cap space.
Okay, fair point. Let's get back to Mr. Dua as well. Mr. Dua, just wanted to ask you, are you looking at any safe haven pockets in the markets right now where investors can actually beat the volatility and continue to hedge their positions? Are there any sectors like that, or do you feel the markets are truly vulnerable across the board?
So, yes, private sector banks and some of the IT stocks is what we think will outperform the market.
Okay.
And we have some specific picks. Last week I was on your show. I spoke about Bharti Airtel, Bajaj
Yes.
Finance, and Biocon. All of them had outperformed. We still believe that these stocks will this thing continue to outperform. In the mid cap space, there have been some spaces, especially say garments, hotels, EMS, real estate, power equipment. So these are some of the spaces where we see a lot of growth still. Valuations are, I think, still not supportive. So that's the space which you should watch out for and look for better this thing, entry points.
Okay, fair point. Viewers, what we'll do is we'll take a very quick break and return very shortly to discuss the pre-open as well as the opening trade. Stay tuned with us.
Karnataka is the fourth largest automobile producing state in India, contributing 8.5% to the nation's vehicle production. The state also has the highest number of EV charging stations, boasting an impressive 5,765 public stations. We were the first to introduce an EV policy in 2017 and will soon unveil a clean mobility policy at our upcoming Global Investors Meet. Backed by our progressive policies, world-class infrastructure, and a skilled workforce, Karnataka is paving the way for growth in both traditional and EV sectors. Join us at Invest Karnataka 2025 and be a driving force in the future of automotive and EV innovation.
Welcome back. You're watching Market Today on Business Today Television. Well, as far as the pre-open rates are concerned, we are looking at the infra, FMCG, oil and gas, PSU banks and pharma spaces up into the green, but half of the market has slipped into the red, including the Nifty as well as the Nifty bank right there. That could be opening lower is what is being indicative of at this point in time. But let's get into our conversation with Mr. Gaurav Dua and Arpit Beriwal, who are with us to help you understand the key pockets that you should be really looking at. Arpit, to you, particularly on the metal space that has been severely under pressure, how are you trading some of the names there? Some have actually come out with good set of numbers too, and there is news flow as well. So Nalco, which was an otherwise underperforming stock yesterday because of the entire weakness in the metal space, has actually recorded a massive 230% year-on-year increase in its net profit. So the earnings are coming in well for at least some of them. Any metal counters that you will be still positive on? It's indicative of an opening 2.5% higher post these earnings.
Yes, you overall Sakshi from the metal pack, as generally the sector has been quite news driven and you have seen a lot of
Yeah.
volatility in this sector. But if we see from the large cap pack, JSW Steel, this has been one of the most trending and the sound counter and less volatile counter within the metal pack. So if we see that chart setup wise on the monthly scale also, it has negative formation of lower rise after four months. Weekly scale after range breakout above 950, 945 levels, it is holding well. Yesterday, you've seen some cooler from high levels post the tariff outcome. But however, we see the setup wise within the entire metal pack, it is trading above the short term moving averages. And generally, the risk reward is relatively favor within this counter. So I think JSW Steel would be a preferred pick within the large cap pack within the metal space. So I think major support is around 925, 930 levels. And slowly, steadily, once the sector recover, I think this is likely to outperform towards 1000, 1020 levels. So JSW Steel would be a preferred pick within the metal pack.
Okay. Gauravji, I'll come to you. Some of the earnings that have come in. One, I wanted to check Nykaa with you. The company has reported a 60% rise in its net profit, and we've also seen a 7% uptick on the revenue front as well. Margins have expanded by 70 basis points. So the earnings look positive. But are you confident of looking at the stock? This has largely been a big disappointment in the new age tech space as far as the performance on the stock prices are concerned.
Yeah, the quarterly numbers are better than expectation, though we don't track the stock actively. We don't have any view on the stock, but what we think and this believe is that it's in a space where the market is expecting
Yes. Okay. I guess there is some technical error. We'll take that question with Arpit. Arpit on
if
Nykaa,
it's
what
going
do
to
you
put some
Okay,
pressure
we
on
have Mr. Gaurav Dua back. Sir, there was some disturbance.
this
We
thing market on
lost
the
your
stock.
audio.
And as I
Yeah. Yeah. Now we can hear you.
okay.
Yeah.
Okay, sure. So, it's a very, very competitive space, and with the pressure on these margins because they are trying to build their offline network, I think that's a stock which we can avoid. On the other hand, in this space, as I've been saying, Zomato and Policy Bazaar are the two stocks that we like, and these are the two stocks that we are holding in our fund also.
Fair point. Let's actually look at the markets now. They have started to tick in the opening levels, and we are seeing a softer start again for the Nifty right now. 23,351 on the Nifty, 28 points lower, 0.2% lower in trade. But we are also looking at is the Nifty Bank, also down by 0.2%. 49,844 is the current level as far as the Nifty Bank is also concerned. Sectorally, the positive action remains to be seen on the FMCG, PSU banks, IT. Metals are showing slight recovery, but the rest of the pockets are still lower. Realty space, which was the hard hit one in yesterday's trading session, is again opening with a sharp 1% loss. Autos are also on the back foot, a percent loss for this one. Broader markets also feeling the pain right at the opening take. 0.7% of a decline for the small caps, about half odd percent decline for the mid caps as well. Consumer durables are also looking weak at this point in time. So when we look at the advanced decline ratio, that seems to be even Stevens. 720 advances to 789 declines at this point in time. But the Nifty gainers include stocks like Hindalco. They also include stocks like Adani Enterprises. Reliance Industries is opening higher, 1261, 0.7% up. You also have ITC, Grasim, 0.7% up in trade. Those are some of the pockets that are doing well as far as the Nifty stocks are concerned. And on the other side, Eicher Motors is 5% lower in trade after the earnings. You have M&M that's down by a percent. Apollo Hospitals, BPCL, Coal India. These are the other pockets that are showing us some declines right at the opening ticks. HDFC Bank also within the large private banks down by about 0.7% at 1703 levels. Tata Steel, Bajaj Auto. These are the other pockets that are actually looking weak at this point in time. Let's take it away with Arpit. Right at the opening, how are you looking at the entire space, Arpit?
If you see overall the market as you've seen there's again the weak opening. So apart from a selective large cap names as we already mentioned, broader market has been paid. So if you see the setup wise as rightly mentioned, selective large cap whether it's Bajaj Finance, Bharti, Kotak has been relatively better. So if you see this chart setup of completely Bharti Airtel. So if you see overall setup wise, it has been a very strong counter across all time frames. So monthly scale it has given a range of around 1690, 6080 levels. On the weekly scale post the earnings outcome, it has given a consolidation breakout. And the good part is that, in spite of market weakness, it is holding at higher levels, trading above short-term moving averages. So for within the large cap pick, I think Bharti would be a preferred pick, and definitely with key support of 1660, 1670, slowly steadily we can see an uptick towards 1720, 1750 levels. So Bharti would be on the buy side, looking at the setup wise from the large cap space, and Kotak we have already mentioned with about the from the banking space. So slowly, steadily, it is moving higher. However, we see Bank Nifty is marginally down 0.2%, but setup wise, it's still at a major strong zone with key support of 1920 levels.
Fair point. You know, some of the other weak stocks right at the opening are Zaggle prepaid another 10% lower in trade. Tilaknagar Industries 5% lower in trade. So those are some of the heavyweights that are declining within the mid cap space, particularly ITC Hotels also declining today. But Nalco is improving post earnings 3% higher in trade. Aisha Motors further down at 5.6% lower. Let's take it away on this one. Mr. Dua, I'll first come to you on Aisha Motors. Auto space as a whole, what your exact expectation is currently? And Aisha Motors post earnings, there was a 17% increase in the net profit. Revenue surged by 19% as well. EBITDA also improved by 10%, but it's also missed some of the estimates. Declining and now at 5,022. How do you foresee Aisha Motors, sir?
So, the quarterly numbers for auto sector have been mixed. Some of them have done this pretty well, especially in case of Maruti because of exports. Mahindra and Mahindra has been excellent numbers, but if you see on the commercial vehicle side, there has been some slowdown, disappointment. Even the January volume numbers, we have seen that the volume growth outlook for the this commercial vehicle isn't great. So some of these stocks which have exposure on that space are feeling the pain of it. So what we have been saying in case of auto sector, Mahindra and Mahindra is a stock which we believe is this extremely safe. It's one of the players which is seeing 15% plus kind of a volume growth in this in quarter 3, where the consumption slowdown was pretty much present. It was the highlight of the last distinct quarter. In that kind of a macro environment, if you're able to show 15% plus kind of a volume growth with equally good say outlook, so I think that's a stock that you should stick on to.
Okay. Arpit, how would you trade Aisha today?
Sakshi, if we see Eicher Motors overall auto pack, if we see it has been downgrade. However, within the auto pack, Eicher and M&M were the two outperform counters. So, post the result outcome, the stock is already gapped down. If we see the setup on the weekly scale, 5,000, 4,950, 5,000 the major support zone, which was the previous hurdle zone, and stock has rebounded from that levels in the opening take and some recovery is seen from the lower levels. However, the setup wise, it is near its major support zone. So look at the setup wise, we'll wait for some setup to clear off and above 5,100. I think definitely you can see again some recovery because the bigger trend of the stock is still positive on the monthly and weekly setup. So setup wise 4,900 is the major support. Till it holds above 4,900, a bias would be slightly positive for this counter and slowly can move towards 5,100, 5,150 levels.
Okay. Mr. Dua, I also wanted to ask you on the gold themed stocks as well, because gold is at a fresh all-time high again. Today, CLSA also has come out with a report on gold financiers, particularly they have upgraded Muthoot to outperform, raised the target prices there as well. They have an outperform call or even on Manapuram Finance too. The gold loan segment they are bullish on currently. How are you looking at the impact of rising gold prices continuously? I think 10 times already in 2025 gold has made fresh record highs. So that's the kind of rally that continues over what we've already seen in 2024. Gold shines bright. Should it continue to have a special place in investors' portfolio?
Yes, so what we have been saying that you should invest in gold since past 5 6 months. In fact, we've been asking our clients to look at the multi-asset fund because it gives you exposure to both equity, debt,
Okay.
as well as this in gold and silver. And multi-asset funds have actually outperformed the other classes in this past 5 to 6 months. And I think there is still a case for it. You can still invest there. It will give you honestly hedge against the volatility in the equity market. In terms of the stock, yes, when the gold prices go up, the LTV value or the loan to value this thing ratio actually helps the gold financiers because the collateral value actually goes up, and plus the ability of the borrowers to take higher loan also goes up. So it is sentimentally in terms of the macro environment also good for these gold loan companies. However, this space is seeing very intense this competition now. A lot of players have entered this space. Even the public sector banks have also also become aggressive in this space. So the kind of spreads that these companies used to earn will be under pressure. So that is what we've been saying. And apart from this, we think that silver has actually
Okay, I guess there
kept
is
up with
again
gold.
some. Yeah.
So if you want to play if you want to play the commodity, you can also say partly invest in silver.
Okay, gold and silver should definitely be big on your portfolio spaces as well. Multi-asset, funds is something that you could be looking at. Arpit, to you, any gold-related stocks that you like particularly?
If you see from the gold space, generally from the large cap, one is the Titan and second is from the Muthoot mid cap space, Muthoot Finance. So first I would look at the setup wise of Titan. If you see the setup wise on the weekly and monthly scale, the stock is in trading in a broader range between 3200 to on the lower side, whereas on the upper side 3600 and 3800. So if we see the setup wise, this is a perfect trading range for this counter. And as we have seen, we have been preferring large cap because of the market weakness. Mid cap and small cap have been seen a good carnage in last couple of weeks. So within the gold space, Titan would be a preferred pick. However, the stock is in a range. So I think a better level to enter would be around 3200, 3250 levels. That would be a good entry point because that is a major support zone. Whereas on the upside, multiple hurdles are seen here 3500, 3600. So from a medium term to long term perspective, Titan would be a preferred pick within the gold space. Relatively looking at the chart wise also, it is trading at the band between 3200 to 3800. So this would be a preferred pick. Talking about the second round of Muthoot Finance, the stock has already seen a good rally. So I think from the current level, the risk reward is not completely favorable. However, we see the setup wise, it is in strong uptrend. So I think in this also, if we see some dip towards 2120, 2140 levels, Muthoot Finance would be a good proxy play to the gold finance companies. So trading over short-term moving averages, right now it's around 2180, but any
Yeah.
dip towards 2120 would be a good entry point. So this would be a two preferred picks within the gold space.
Okay. Mr. Dua, we were talking about how Donald Trump's tariff talk has been a key watch for all the investors and analysts. The other key watch will also be the meeting between Prime Minister Narendra Modi and Donald Trump also this week. Now, in the light of that, could there be any sectors that could probably be important for investors to watch? Could there be any defense tie-ups, any energy tie-ups that could also come in? Because every time we have seen Prime Minister Narendra Modi visit the US, there's also a lot of business that he is able to get, along with probably evening out a lot of irons that are there at this, or wrinkles that are there. Tell us, how are you looking at this meeting? How crucial is it going to be from the market standpoint?
No, I think the focus would be on avoiding any fresh levies on India. And yes, defense stocks have been in news because of this meeting, especially, Hindustan Oracles because of the so I think that's one stock which you can watch out for if these negotiations are able to quicken the delivery of engines to this thing HAL. IT also will be, I think, part of the negotiations or part of the talks. H1B visa and possible some kind of policy on that front will also, I think, be part of the talk. So IT and specifically to this thing defense, or this thing HAL, and to some extent PL, I think will have some impact because of these talks.
Okay, fair point. Well, we will thank you then, Mr. Gaurav Dua, for being with us on this morning edition to help us navigate through all of these important themes and triggers that the markets will be looking at as well. What we'll do, viewers, is we'll again take a very short break and return. Arpit Beriwal will be with us on the other side to spot some stock ideas for you. So stay tuned.
Karnataka has established itself as the leading hub for electronic system design and manufacturing in India, contributing 10% to the nation's electronics output. We are also home to 400 plus MNCs with global R&D centers, with over 100 fabulous chip design houses and 40% national share in electronic design, Karnataka stands as a prominent hub for chip innovation in India. Invest Karnataka 2025 will bring more global players to benefit from the state's strong and tech-enabled ecosystem.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi Batra, and with us is Arpit Beriwal, analyst of derivatives and wealth management at Motilal Oswal Financial Services. Warm welcome back, Arpit. Do tell us, first 15 minutes of the candle is just about to get formed. What is the sense that you're getting? We are now closing in on 23,300. How much more weakness in the markets do you see from here?
About Nifty, Sakshi, the structure in the last 15 days, we have seen a recovery from 22,800 to 23,800 levels. So that's a almost recovery of 1,000 points. And if you see the last setup of last 5 sessions, Nifty slowly steadily has corrected 100 points almost on each day from 23,800 to 23,333. If we see the retracement also, 23,300 acts as a major support. That's a 50% retracement of the entire up move in the recent 15 days. So I think setup wise, till it holds below 23,400, overall setup wise, if we see the broader market also, there's some still weakness. And 23,333 was a major level that we were talking from a lot of time regarding with that. So 23,333 is a key trigger. Till it holds below that, some weakness could be seen towards 22, 23,250, 23,200 levels. At the same time, 23,400, 450 would be a major hurdle zone. If it passes above that, then we can see some recovery in Nifty.
Okay. Let's look at the sectors that are still holding up in this weak setup. It's only IT and FMCG, that too with minor gains at this point in time, viewers. And you know, the rest of the pocket has all slipped. Look at the realty index. Yesterday there was a sharp 3% fall. On top of it, there is an over 2.5% fall again today in the real estate space. 2.2% lower now for the Nifty realty. Small caps and mid caps, there is further sell-off happening. Now small caps are already 1.8% down within 15 minutes of trade in today's trading session. Mid caps are down 1.2%. Now 2% kind of a fall for small caps had happened towards the last part of yesterday. But today, just in the beginning, in just the 15 minutes of trade, we've actually seen a 1.8% decline in the small caps. So that is a really vulnerable pace. That's where the pain point is emerging from right now for the markets. Of course, all the sectors have also come under pressure, barring just slight heavyweights that are holding up the IT index and slight heavyweights that are holding up the FMCG index. Before we come to those, let's actually talk about the real estate space. Arpit, how are you looking at this? This has been an erstwhile favorite, a wealth creating space for investors. Index wise also, this index has outperformed over the last 3 to 4 years consecutively. What do you think? And despite all the rate cuts coming in and the hopes coming in that finally the EMIs will be cheaper for people to go ahead and look at real estate space, this space is again looking weak. Why?
Sakshi, if you see overall the reality space, if you see the setup wise, if you see the bigger market trend, and from the start of the September end series, last 4 months has been really painful for the broader market. And particularly if you talk about the reality pack also, if I look at the monthly setup wise, on the monthly chart, after a huge consolidation of almost 6 to 7 months, it gave a breakdown below 920, 930 levels on the monthly scale in the January series. And from that, we have seen good correction across all the stocks. If you see the weekly setup wise, last to last week it rebounded around 820, 830 levels. And however, again, we have seen from last 4 to 5 sessions, we have seen a down tick because the bigger trend has been pain, whether it's DLF, whether it's Godrej, whether it's Oberoi. So looking at the setup wise, as generally these are the high beta counters in spite of RBI policy rate cut and rate sensitiveness, but market is in no mood to give any positive outcome for the stock specific. So looking at the price action, looking at the setup wise, there is still some pain left in this in this space. And if we see the broader market also, banking also losing up, reality is also losing up. So I think setup wise, still there is some more pain left in this counter. And I think better to wait, avoid bottom fishing. However, if it's from an investment perspective or a long-term perspective, definitely the one reality fact that is looking very good as the stock is corrected from higher levels, that is overall reality. So overall reality have seen a good rally from 1600 to 2400 levels, and now it is back to its major support zone. So from a medium-term to long-term perspective, Oberoi would be a preferred pick. That too on dips. Apart from that, there is still some weakness in the reality space. So better to wait and watch and avoid bottom fishing at current levels.
Okay, fair point. So avoid bottom fishing at the current levels. Let's look at the winning pockets, IT and FMCG. Do these spaces look promising to you for seeking a safe haven? We've slipped below 23,300 now, viewers. Keep an eye out on the Nifty, 80 points lower now. IT and FMCG, Arpit?
Sakshi, if we see the IT index has been a huge outperformer across last 6 months. In spite of market corrected, Nifty almost corrected 12 to 13%. Bank Nifty is corrected, but Nifty IT index is a relatively outperformer. So if you talk about the IT index, if we see the setup wise on the monthly, it is still strong. And within that, if we see the stock specific large cap IT has been relatively resilient. Tech Mahindra, and if we see the HCL Tech. So if you talk about first Tech Mahindra, relatively the stock is in a range. A major support is around 1600, 1620 levels, strong bullish candle in spite of market weakness. And I think as soon as we see some recovery in the market, IT index is definitely likely to lead. So setup wise, TechM is a preferred pick within that IT pack. Along with that, if we see the setup of HCL Tech, so HCL Tech also relatively after a sharp correction of 10% from high levels, it has found some support near around 1700 levels. So within the IT pack, Tech Mahindra and HCL Tech would be a preferred pick. If we talk about FMCG index, however, FMCG index, the setup wise is not that promising. We've seen some green shoot or some uptake post the budget announcement, but again, there was no follow up buying at the higher levels, and again, the index is corrected from higher levels. So on the FMCG index, also very selective pockets are better. But if we see from that, one stock that is looking still better would be Tata Consumer. Tata Consumer, the chart setup wise, if we see on the monthly scale, it is negative the formation of lower highs above 970, 980 levels. On the weekly scale, the structure is forming higher highs, higher lows. And on the daily scale also, even in spite of FMCG index is down, however, Tata Consumer is form a strong base near around 1000 levels. So from a trading perspective, Tata Consumer offers good risk reward with support of 1000 for an upside move towards 1070 and then 1090 levels.
Okay, fair point. Difficult market to really spot some spaces, but those are the limited ones that Arpit believes that you could probably look at. Let's look at FNO space also, Arpit, and Adani Enterprises is taking higher today, 3.5% up. You also have stocks like Adani Green Energy pulling up in this space as well. Along with this, you have then Adani Total Gas as well within the Adani Group. So the Adani Group stocks are probably defying the gravity, and some kind of move can be actually seen on this space. What is pulling up the stocks higher? Where do you find sustenance of momentum?
If we talk about the overall Adani group itself, generally Adani Port has been relatively a good resilient counter. Although if we see the setup on the weekly and the monthly scales, all the stocks are forming lower highs, lower lows. That clearly indicates the bigger trend of the trend of the stock is still in pain. However, if we see from the daily and weekly setup, some recovery was seen from lower levels in the last week, and now a good part is that it is holding at higher levels. So within the Adani space, if we see Adani Port would be relatively better placed with multiple supports around 1100 levels. However, trading near its 200 demo, so a momentum above 1180, a closing about 1180 can definitely see some uptick towards 1200, 1240 levels. So apart from that, Adani Port, rest of the counters we still like to avoid because generally they're quite volatile and the risk reward is not favorable. So I think Adani Port would be still a better pick with major support at 1100 for a slow and steady up move towards 1200, 1220 levels.
Okay, fair point. So that's the Adani group of stocks within the FNO space that you could look at. Let's pull up even the broader markets to see if there is anything interesting to talk about there. While there are many stocks that are holding up in high single digits, there are rarely some that we can talk about. Bodal Chemicals is up, 5.8%. Ujas Energy again, second day in a row, it's been up and about. You have stocks like Ceylon Exploration, that's up 3.7% in trade today. Then you also have Fiberweb that's opening higher. Well, very far and few between stocks. Rarely the ones that we discuss are actually moving. The most active ones are actually not part of the gains. On the losing side, however, Zaggle Prepaid is again lower by 10 odd percent 2 days in a row. KCP Sugar is lower in trade. You have Supriya Life Sciences that's declining. Dream Focus is declining. You have Newland Labs that's down in trade, National Fertilizers, Chamanla Setia Exports, rice fertilizer related, EIH Limited is down in trade. So the broader markets also seem to be skewed towards more on the weak side, looking at all those stocks that are tracking on the lower side. But let's look at Arpit. Anything within the Nifty 500 basket that catches your attention either on the long or the short side?
So on the long side, if we see, I think Bharti Airtel would be a better pack. Open on a flattish note, some recovery was seen from 60-90 levels. The
Yeah.
monthly and weekly setup is very strong. So I think slowly, steadily, the move can be seen towards 1720, 1740 levels. So that would be from the long side. If we talk about the short side, setup wise, if we see the setup of Colgate. Within the FMCG pack, Colgate has been quite in under pressure. Last in the January, seeing some recovery. However, this series we have seen again some selling from higher levels. On the weekly scale, it has given a breakdown below 2600 levels, and on the daily scale, it is forming lower as low lows. So clearly, upside momentum is missing. And after breakdown about 20 below 2600 levels, definitely some weakness can be seen towards 2550, 2520. So Colgate would be on the weak side, whereas on the Bharti would be a long side setup trade in this current market.
Okay, got that. So there you have it, some of the trades that have been shared. When we look at some of the other pockets, Maruti within the auto space is ticking higher. In a week setup, 0.6, 0.7% up within the large caps as well. That's also holding up in trade. Nika, we had discussed post earnings. It's showing us some ticks on the higher side, 1.8% higher. But most part of the market is actually lower today. Tourism hospitality space, you will see some hotel stocks and QSR chains buzzing. You have Viviani International, you have Jubilant Foodworks that's up and about. Then you have Samhi Hotels that's up, TGB Banquets is up as well, Easy Trip Planners, some buzz being seen. There's this entire talk about, Arpit, how tourism and hospitality could be the next big thing or the theme that we could look at for the next 3 to 4 years or 5 years, because that's where the government's focus will also be on developing India as a tourism destination as well. How are you looking at this space? Anything that catches your attention?
So if you see the overall space wise, this space has given very strong returns in last one and a half year.
Yeah,
So if you talk
true.
about the hotel space, whether we talk about the aviation, both space has been very promising, and we have been quite bullish also. But however, if you see the structure wise in the last couple of months, obviously we have seen some beaten in the mid cap and small cap space. Because of it, a lot of stocks have corrected from the higher levels. However, looking at the bigger trend of the stock and sector wise, we are still optimistic on this sector. And within that, preferred pick would be the top two picks within the hotel space would be Indian hotels. So if we see the monthly setup wise, the stock is strong uptrend from 400 to 900. Seen we have one way rally. Post that we have seen some current cool off from higher levels. However, again recovery was seen. So in spite of the mid cap carnage that we are seeing, the stock is still holding at higher levels, trading near its 250 DEMA. So from a medium term to long term perspective, Indian hotel will be a preferred pick that investors can definitely add near 730, 750 levels with major support of 680 for an upside move towards 900, 950. Apart from that, second to play this theme would be Indigo. As you've seen, the Indigo has been a huge outperformer, and monthly setup from last 6 to 7 months, it has been consolidating with multiple supports around 3800, 3900 levels, whereas on the upside, 5000 is a major hurdle zone. So setup wise, because of the bigger market trend is in pressure, we have seen some cool off. But as soon as we get dip towards 4000, 4100 levels in Indigo also, that would be a very much good entry level from a medium term perspective. On immediate basis, after a cool off from 4500, it is next to near its support zone 4250. So this would be a good bet to play the tourism theme and proxy play for that.
Okay, fair point. Let's also discuss some of the other pockets then with you, Arpit. I also wanted to get a sense on the The pocket within the pharma space as well. That's something that we haven't discussed today. But Lupin received an approval from US FDA for its new drug application. That got in focus, and the pharma story has actually been doing pretty good. Even last year, it was the top performing sector as well. And there are newer stocks within either the frontline pharma spaces or the allied services that are getting some traction. Anything that you like particularly within the pharma pack that should be tracked for sustained momentum?
If we see the pharma index, as we've seen the defensive comes into picture, pharma and IT index whenever we see
Yeah.
some turmoil in the market, and this has been the perfect sectoral play also. So pharma index relatively it is trading in a band. From last almost 7 to 8 weeks, if we see the setup wise, it is trading in a broader band between 21,000 to 24,000. And within that stock specific action we have seen within this space. Within the pharma pack, if we see the setup wise of Loris Lab, so Lawrence Drive, good, steady and slow move. We have seen recovery from 500 to almost 620 levels. So if we see the monthly setup wise, higher highs is forming in spite of market weakness, and slow and steadily we have seen an uptick. So within the pharma bag, I think Lawrence, we have seen and we have been quite optimistic or quite positive also from a price action perspective with key support around 600. Slowly, steadily can the stock can move towards 650, 650 levels. Apart from that, the second would be from the large cap package and Lupin. So the bigger trend of the stock is positive. However, in last 4 to 5 months, the stock has been trading in a range between 2,000 to 2,300 levels. So some cool off was seen from that high levels in immediate last to 1 2 days, but major support is around 2,000. So till the stock holds above 2,000 levels, bias will be positive for our medium term target towards 2,300 2,400 levels. So Lupin would be a preferred pick, followed by Loris within the pharma pack.
Okay, fair point. We have the first half an hour out, viewers, as far as the markets trade is concerned. We tested briefly 23,300 on the lower end and then again picked up some recovery, and therefore we are 44 points down in trade now, 23,335. Do you think this recovery will take shape through the course of the day and we might actually look at an ending in the positive? Is that possible, Arpit, for today?
Generally, actually, we see the setup on the daily frame. There has been hardly any scenario where the index has fallen continuously for 5 days. And
Yeah.
if we see this is the fifth day that the index is falling, how it's just the start of the session. If I look at the broader market internals, Nifty IT is holding, so that's a good sign. That can definitely pull back some recovery in the Nifty index.
Sure.
However, if we see the banking index, the recovery that was expected, it is not broadly in line, and banking index is putting some pressure. So I think immediate basis, the retracement level comes out to be 23,300 that stands out for Nifty. And I think for some recovery on the hourly chart, if I see 23,400 is the minor hurdle level. If we see some breakout about 23,400, then we can expect some recovery in the second part of the session. However, in the till the time being, as you're seeing some weakness in the broader market, so the structure would be still a little bit dampened. So 2300 on the downside and 23,400 on the upside would be a key level to watch out for any recovery going ahead.
Okay, fair point, right, Arpit. Let's look at some of the other pockets within the IT only. You did point out about Tech Mahindra. What else looks promising within the IT pack to you? What else can one track for momentum?
If you see overall the chart of Wipro, surprisingly, generally this counter was overall a quite underperformer till 2024 series. However, post that we have seen relatively outperformance. So if we see the setup on the monthly scale, it is forming higher highs, higher lows from last almost 7 to 8 months. On the weekly scale also, it has retested its previous breakout zone around 300 levels. Recovered the entire week's losses, and now the stock is consolidating at its upper band near 314 to 324 levels, trading above short-term moving averages. And I think if we see some recovery in the Nifty IT, so definitely this stock can slowly steadily head towards 325, 330 levels. So Wipro would be a second preferred pick within this space. Market weakness, in spite of that, it is holding. So I think with key support of 305, slowly steadily the move can be seen towards 330, 335 levels.
Okay, fair point. 947. Metal recovery, does that show you any promise at all, Arpit, today, or should one really take it with a pinch of salt? Is it a dead cat bounce as far as the metals are concerned?
If you see, metal index has been quite choppy and mainly driven by the news sensitive. However, we see the setup is better to wait. for the metal index to stabilize, because generally this counter has been quite volatile. However, if we see the setup of JSW Steel, we have been quite bullish on this counter, and this counter is relatively better as compared to the within the entire metal pack. So I think JSW Steel can be still bought at dips near 955, 960 levels, with key support of 930 for an upside move towards 980, 985 levels. So apart from that, other counters are relatively high beta, but JSW Steel is relatively better placed on charts. This is still one can go for.
When we're talking about the entire infra-allied spaces, I wanted to also discuss Grasim. Why? Because the company, the flagship entity of Aditya Birla Group, it came out with earnings. There was a net loss of 168 odd crore rupees for Q3. It came down from profits to losses, yet the stock is up by 2%. This is despite the loss, the revenue surging about 27% for the company on a year-on-year basis. Despite the bottom line loss, we have seen even Jefferies come out with a buy call on Grasim with a target of 3150. Now, they believe definitely Q3 EBITDA was below estimates. This was largely due to the lower VSF profitability in the new businesses revenue that jumped 52% Q on Q. The EBITDA loss also has, however, shrunk on a Q on Q basis to 325 crores. Paint segment revenue is improved is what they say. B2B e-commerce revenue has also grown, and what we've also seen is that net debt has increased as a paint capex has touched 90% of the target, but the stock is up and about 2% higher. How would you really look at this stock, Grasim, at this point in time, Arpit?
If you see the setup of Grasim, relatively from the panic low it made on 13 January, near 2276, low instantly the up move has been seen in this counter. Now the stock is at major zone of its converging of 50 and 200 EMA. However, we see the setup wise, after almost 13 session, it has given a range breakout above 2500 levels, and post from last 4 to 5 session, it was finding some pressure. Looking at the setup wise, a closing above 2500 levels on the spot levels can definitely give us some uptick towards 2550, 2580 levels. So positively on the chart setup wise, it is still positively placed with key support of 2450 for a slow and steadily up move towards 2540, 2560 levels.
Okay, fair point. Well, Arpit, I think we will have to just see how it really pans out in trade right now. It's been a volatile start for the Nifty yet again after 4 days of losses, but we will just see whether the fifth day turns out to be a day of a recovery, or does it actually get under pressure yet again. The Nifty bank is further losing into the red space, 0.8% lower, 49,563. You rightly pointed out that the support that was expected has actually not come in here. Broader markets are further into the deep red. You can look at the small caps at 16,280 odd levels right now. This is a sharp 2.2% decline. Mid caps down by 1.5%. So let's see if there is any kind of a recovery from these levels. We are at 23,300 odd levels at this point in time, and the markets do not show any signs of a sustained recovery in the first half an hour, 35 minutes of trade. Arpit, we'll leave you at that. Thank you so much for navigating the market moves for all of us, as well as spotting some ideas both on the long and the short side for our viewers. We'll continue to track the markets for you viewers throughout the course of the day. So stay tuned with us. These are tough times in the markets, but let's see whether there are any signs of an improvement and what the market is really looking for. Does that come as a key trigger for a bounce back to come in? Stay tuned with us on Market Today and on Business Today Television.
Invest Karnataka 2025 is our chance to showcase Karnataka's best to the world. The business community, startups, academia, and even youngsters, I invite everyone to be part of this mega platform. From February 11th to 14th, let the world witness why Karnataka is the best destination to invest.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock-related queries. Now, in case you're still wondering in this week's setup in the markets, what should you be doing with the stocks in your portfolio?